Hi there. Thanks, guys, for coming today and letting us share with you the story of Western Copper and Gold and Casino deposit. What you see on the screen there is the deposit itself. It's up in the Yukon in Canada. It's northern Canada on the Pacific side. And I'd like to talk a little bit about it because often when you think of northern Canada, you think of a lot of snow. It certainly gets cold up there, but actually there's not a lot of precipitation. They get about 350 milliliters of snow or rain per year, so it's actually semi-arid. Great spot to build out a mine. The deposit itself is actually the mound you see on the right, and the planned mine is down where you see the airplanes on the flat area. It's gentle rolling hills in the area. Very good spot to build a mine. I am going to make some forward-looking statements, so please read this if you are going to make an investment, or when you are. Cash, we have about $4.5 million, or we will end the year with about $4.5 million in the bank. Our budget for the year is about $3 million, so we're sitting pretty well. Our share price, well, we've come down since I put this together. We're at about 75 cents, and that's on the TSX. We also trade on the NYSE American, both under the symbol WRN, have about 100 million shares out, so our market cap right now is about $75 million Canadian. The shares themselves held 6% of that is by our chairman under the management board there. And then an important line there is our private high net worth investors. And that actually comprises about 7 people, 6 wealthy individuals, and then 1 portfolio manager. These are people who have made money with our chairman over the course of his career. It's very patient money, doesn't trade very often. So we actually are very tightly held there. You'll notice on the bottom we have a bit of a royalty, and that's held by a Cisco. Previously was held by Orion Mine Finance. So while I'm going through the presentation, I want you to kind of think about what majors may be looking for in a project. We're at a point where we're looking actively to bring in a partner either for part of the project or all of the project. And I think we tick off a number of the requirements that majors are looking for. First of all, we have a very large deposit. It's large both as a copper deposit and it's large as a gold deposit. It'll produce over 100,000 tons per year of copper and 400,000 ounces of gold. All through the down cycle, it's been a tough kind of 7 years in the market. At any price deck, we were still above 15% after-tax IRR. Today, we sit around 23%. So the economics on this project are very solid. Goldman Sachs actually has ranked us #1 on their economic study that they do every year in the copper projects, 2 out of the last 4 years. Long life, initially we have a 22-year mine life proposed, and if you include the inferred on that, it brings it up to 55 years. We're up in the Yukon, which is a good place to operate, home of the gold rush, at the turn of the century. They have a miner on the license plate. The major contributor, apart from government, to the GDP is the mining sector. And we're actually fairly well advanced. It takes a long time to bring on projects of this size or of any size in this these days, and we're about 2 to 3 years away from being fully permitted and ready to make a construction decision. So as mentioned, it's fairly large. We've got 9 million ounces of gold in the reserve. We've got an additional 9 million ounces of gold in the inferred category, 4.5 billion pounds of copper plus 5.4 billion in the inferred. So over all categories, you've got 18 million ounces of gold and 10 billion pounds of copper. So it's a large project. I'll just stop here because it's not a bad little map. You see where the casino is. Our plan is to ship it out of Skagway. Skagway is actually in Alaska. Other mines are doing that currently. It's a close port, deep water, year-round port, close to Asian markets. By way of revenue, we're about 50% copper, 40% gold, and a chunky bit of moly at 10%. So it's important to add the moly in when you're modeling this project. And this graph here, you may have seen it before. It's actually a Wood Mackenzie graph, and almost every copper company has it in their presentations. We've had it in our presentation for 5 years, and I've always talked about, okay, when it comes. And we're finally here now. and we're starting to see a deficit in the market. If you project out 10 years, there's a 5 million ton deficit. The red line is the demand, copper demand. It's fairly steady actually at about 1.8% around the world. Half of that comes from China. And it gets all the attention, unfortunately, on the price of copper. China sneezes and the price will come down. It's doing well and it'll go back up. But the real story is not on the demand side, it's on the supply side. And there's just an absolute cliff that is emerging. And the reason is it takes a long time to bring on new projects, and the existing projects are coming to the end of their life and have lower grades. So that big 5 million ton gap translates into about 65 mines the size of Casino. Casino is a big mine and you're going to need 65 of them. And the reality is there aren't 65 projects out there. And there are a number that are already held by majors. But what we did, we went through an exercise and put as many projects, and these are TSX listed projects that have some kind of study and are not owned by majors. And we came up with about 16. And we put all of them in there. A number of these are not economic. A number are in areas that you'd never want to build a mine at. Legitimately, there are about 2 or 3 projects of any kind of size that would move the needle that will be ready and able to come online during this next cycle. Casino, of course, being one of them. And you see similar stuff on the gold side. I'm sure you go to any gold conference and they'll talk about there's been lack of new discoveries as well. I don't talk as much about it on the gold side. I have a difficult time anticipating where the price will go for gold. But the difference between the gold market and the copper market for the juniors is if I'd put a graph up there of all the different gold projects out there, there might be 200 or 300. There are very, very few copper projects. But on the gold side, if you take just the amount of gold we have, you'll see that we're 3 to 4 times bigger than the Coffee deposit. I bring that one up because Coffee deposit is right next to ours up in the Yukon. It was purchased by Goldcorp 2 and a bit years ago for $500 million. If you add in or make it on the gold equivalent basis, we're bigger than Donlin Gold. And I use that comparison. Donlin has a billion plus market cap right now, and we're sitting under 100 million. And the most important is that throughout the last 7 years, it's been quite tough in the market, and you have to wait for windows to open. I'm thankful that we're starting to see some activity in the M&A space. The biggest one, of course, was Randgold and Barrick merging to become the biggest gold company, but you're also seeing it on the copper side. Lundin went after Nevsun and then were trumped out by Zijin for the Nevsun or the Timok asset, which was good to see. Galore Creek was just recently purchased by Newmont in the last couple months. And last week, Mason Resources, a small copper deposit in the States, was purchased by Hudbay. 110% premium. So we're starting to see that activity. The majors certainly recognize that they need to fill their development pipeline. And so we feel that we're really well positioned here going into the next year or so. Talk a little bit about the project. Excuse me. The team, we're led by Dale Corman, who's our chairman. Actually, this whole team was with a company called Western Silver, and we spun out of that transaction. And they took a project, fairly similar to Casino. It was an asset called Penasquito. They took it, they did all the engineering on it, they got it permitted, and then sold it to Glamis Gold for $1.6 billion. Goldcorp since took over Glamis. That asset is a producing mine, and about 30 to 40% of the net asset value of Goldcorp. So we're trying to employ the same model. Hopefully we time it with a hotter market, which they were able to sell into, and their shareholders have done quite well by that. A little bit about the deposit. It's a large copper gold porphyry. It has a gold cap on top. It wasn't glaciated, which is enriched in gold and depleted in copper. We have to mine it off anyways. It's 157 million tons at 0.3 grams per ton. Kicks off about 80,000 ounces per year for 15 years. The real value, though, is below that, and in the lighter orange, what you have are the first 4 years of production. First 4 years is at 0.7% copper equivalent, so we get some higher grade coming in. Really helps the cash flow and the returns on the IRR. Below that is the balance of the 22 years. You've got 0.5% copper equivalent on that. And even below that, you've got the inferred category as well. I've just added this black line through the middle there. We get a little bit of drilling envy. Guys are putting out drill results lately. We actually haven't drilled in about 5 years. But that was one of our drill results that we had. It's 700 meters at 1% copper equivalent. It just ends at the bottom there. It's about, it's open at depth, and the last 100 meters still was 1% copper equivalent. So there is some upside. It's been interesting over the last 5-6 years. The gold companies that we've been chatting to always ask how we can stage this project out and can we make it maybe a little smaller. Now the copper guys are interested again. They're asking how can we make it even bigger. So there are some targets for us. It's expensive drilling, but perhaps somebody else will drill it down the line. The economics on the project work, 2.3 billion NPV at spot prices today, about 23% IRR, and under a 3-year payback. Most importantly, and I mentioned this before, we were always above that hurdle mark of 15%. Even at a $1,000 gold and $2 copper, we had a 15% IRR. The reason the project works, couple, 0.7% for the first 4 years is pretty good, but really it's the strip ratio. That 0.59 to 1 is best in class. Gives us negative cash costs if you want to play those games here. A better way to look at it is on a co-product basis. It costs us $1.41 to produce a pound of copper and $616 to produce an ounce of gold. And I'm not sure why that's sideways, but what that is showing is the CapEx. And it's certainly a big number. The CapEx on the project is $2.5 billion. You don't see a lot of projects being acquired over the last 5-6 years with a CapEx of that amount. We're starting to see some higher CapEx projects coming into play. It is an average size copper project, and that's what this is showing. This is capital intensity per pound of copper produced here. So we're right in the middle in terms of what the CapEx should be. These handsome guys are leaders in Canada. You've got the Prime Minister. We were fortunate enough for him to come to Yukon last year. He's standing with our Premier of the Yukon. And it's the first time that the Prime Minister came to the Yukon. Only has 30,000 people. But he came to pledge some infrastructure dollars to the territory. It's about a $500 million infrastructure pledge. A third of that, basically it was for 3 roads. One of the roads is called the Casino Road, and it's a road to our mine. It's a 200-kilometer access road. And it's a $130 million commitment that they made. So they're going to pay for 100% of the first half. They're starting to build that. They've already put in the permits. It'll start construction in the spring once it warms up a bit. So that was a huge benefit to us, really. It was an endorsement at the federal level. It was an endorsement at the territorial level. But most importantly was that the First Nations along the road signed off on the road. And, make no mistake, they know it's going to a mine. In Canada, the first question you should ask if you're permitting a mine is how are your relations with First Nations? Projects move ahead if they're in favor of it, and they can be stopped if they're not. The other thing we've been doing over the last 4 years, we've done a lot of studies on the project. We did all the engineering. We've done 2 pre-feasibility studies. We've done a full bankable feasibility in 2013. In 2014, we started permitting. So we've got 4 years of permitting under our belt. We've just finished off basically the last piece that we need before we can do our final submission on the permitting side. Unfortunately, it takes a bit of time to permit mines in Canada, but once you're permitted, you're in a very good jurisdiction. They're unlikely to change the tax rates and so on. And so, like I said, we're on the back side of the permitting, and there's light at the end of the tunnel here. What we show here And then there's actually a better map of that in the brochures, which are at the back of the room. But just this is an RBC report that came out and listed all the projects that are out there, and their production. They've actually, ours is a little bit lower than what it should be, but production and IRR. And what we've done is put a filter on that. Generally, the hurdle mark is 15%. You want a project that is going to be above 15% IRR, and you want majors are looking for projects that have at least 100,000 tons per annum of copper. And you're left with projects, I don't know if there's a thing. You're left with about 8 projects that remain after you put that filter on. There are only 2 in that group that are not owned by majors, and of course Casino being one of those. So we feel we're in a really good position here. And the area that we're operating up in the Yukon, and this is a map, a claim map. You see Casino in the orange there. It has attracted probably more investment or a number of investments from majors over the last 2.5 years. The first being the biggest one from Goldcorp, which is the green right beside us, purchasing that coffee project in 2016. Since then, Newmont has made some investments, Barrick, Agnico Eagle, Kinross, Cisco is financing a mine up there right now, Coeur, a number of them. So we know we're in a good area. If you add up every project in the Yukon, their reserves, combined, they would equal what you have with Casino. He or she who owns Casino will certainly control the mining in the Yukon to some extent. And this is our last one we have here, and I bring it up because we do have some analyst coverage. Lucky enough that Heiko has joined us, and he's an analyst out in New York. He's also German speaking. So he's going to say just a couple of sentences here, and we're happy to answer questions down the road or later today if you want in German. But just before I bring Heiko on, a little bit about the investment thesis on this. We're trading at about market cap is 75 million right now. We certainly are leveraged to the price of gold and copper. In 2011, when we had $4 copper, we were 400 million market cap and kind of slid back down during the down times. In 2016, gold hit 1,400. We were 220 million market cap. In June of this year, when copper was over $3, 330, we were 130 million, and we've slid back down. There's certainly some ups and downs, but the real re-rating should occur. We're hoping sooner rather than later when we're able to bring in a partner here, either for some or all of the project. So thanks for your time, and I'll let Heiko say a few words.